Welcome to Agoracom, Small Cap TV, best of the best. This is George Cholis, founder of Agoracom, and with me, as always, Alan Barry-Laboucan, our chief market commentator. Alan, say hello.
Hello, everybody. Yeah, I actually named it a little bit differently this time, George. Last week I was at the PDAC, so I put a title on this one as the PDAC Review Show. But yeah, we're going to talk about stocks as well.
All right. So for those of you who don't know what we do, first time, Alan and I do some pretty thorough investigation of the small cap space, try and apply some theory as to what's going on with the broader markets, how it affects the small cap stocks, and then from there we make picks to support the sneeze about the sneeze. And from
George, I'll be one of those good broadcasters, and I'll take over for you for a couple seconds while you're
sneezing. You do that. So we're gonna make some picks for you. Alan tends to be a little more mining and resource focused. I'll be a little more broad based, anywhere from ETFs to tech stocks to anything. To tell you the truth, I'm much more Momo, fast trading. Alan's more long term buy and hold. Alan, let's talk about PDAC first.
Well, and I got a strategy to talk about later, George, that I think will totally trounce your short-term trading strategies. And you might as well just stop wasting so much time with it and follow my strategy, because at the end of the year you'll do a lot better.
Yeah, have you got your microphone hooked up to your heart monitor? Because it just sounded like this whack, whack, whack.
No, it's my dog. He's actually trying to find himself a comfortable space under my.
All right, then. It's always sounded like it was a heart monitor or something. All right, so let's talk about PDAC. First of all, I'm gonna make a call, and I'm gonna post this to our blog. But I'm gonna make a call right now that I'm gonna call a market melt up with respect to the small cap companies in Canada, right across the board, the venture exchange. It's going to be really led by technology and medical. All right, technology and medical seem to be absolutely on fire, and for good reason. We'll talk about that. But I also think the biggest gains are going to come from the junior resource companies that are left, because the dead guys are gone. They're dead. The guys left standing are trading at ridiculous market caps, $500,000, $1 million, $2 million, $5 million. They're just so cheap. I don't know when it's going to start, but when it starts, it's going to be fire. Now, this obviously doesn't include any big macro melting effects around the world. If we have some kind of a economic disaster along the way, if we have another financial crisis, but all things being equal, that's the call I'm making. So, Alan, tell me. That's what my prediction was before I got to PDAC. PDAC only made me feel better about that. Tell me what you saw at PDAC and whether that agrees, confirms, or contradicts that. And by the way, everyone at home knows Al and I have no love-in for each other here. If we don't, this ain't you patting each other on the back. If we disagree hard. So, Alan, do you agree with that, or do you see something different?
Actually, George, I do agree with it in a lot of instances. I think where we would disagree is the way to play it. You're more, like I said earlier, you're more of a short-term guy, a trade-in, trade-out fairly quickly, and I think I've got a strategy that's going to outperform that. But yeah, I'm seeing some very similar things. We're going to talk about that later on this strategy, but one of the things that I saw at the PDAC, it was a little disheartening, George. I saw a bit of a controversy at the show. I don't know if you noticed, but there were some folks walking around with "Who found it?" and then there was a couple cartoons of guys, and then below that they had the board and Discovery. And that's the one that's owned by Probe Mines. And what the controversy seems to be about is that David Palmer from Probe was given the PDAC Bill Dennis Award, which is the prospectors award, and the two prospectors.
Before you go further, I'm interrupt you because now I know why. I stopped by and I saw the Probe people to congratulate them on everything, and they said, "What's up with Alan Barry?" And I said, "What? I don't know." So obviously there's some kind of controversy here. So all right, now I want to hear. But let's not get too far into this controversy. I want to get the picks, but
yeah, no, I'm just giving you the highlights. I'm just giving you the highlights, George. And the reason I am is because I feel very strongly about this. You
All
know,
right.
that Prospectors Award, I think that you know, it's supposed to go to the prospectors, and they were being left out of the show, and I just don't think that it was the right way to handle things, and so that was the big controversy of the show.
So
But
issues
then,
with
what's
PDAC,
that?
your issues with PDAC, not David Palmer. I mean, Dr. Palmer is just accepting an award that's given to him, but you think
Well,
PDAC
if,
should go back to its roots at the end of the day.
in my if I can only say what I would do in that situation, George. And if I were in that situation, I would say that I can't accept this award. This belongs to 3 people, not 1.
All right.
But that's just me.
Sure, sure. All right, good to know that. That's I mean, always good to know what's going on. But let's go into what you saw. How are we going to make money? Are we going to make money?
Okay. So at the PDAC, it was by far the best one I've ever been to, George. It was.
Not ever. It doesn't rival 2006 and 2007.
By far the best, George, because I think what you can do right now is lay the groundwork for what's going to be impressive growth in the future. Okay? For example, I've told you a little bit about a gold deal that I'm working on. We were able to make a significant step. I think we'll have a public announcement in the next week or so. And on the diamond front, my Dunedin Ventures, I talked to a lot of people in the diamond space. There's a lot of enthusiasm out there for diamond deals right now, George. Diamonds have been one of the best performing commodities over since the 2008 economic collapse. And there's a real the nice thing about diamonds is there's only a small group that are really serious about it, and those seem to be the ones that are getting attention. And Dunedin is sort of a new kid on the block that's making some noise, and I was helping tell the story out there. I had some meetings with Pat Boland. I think that our audience is going to be excited about this because Pat Boland, you know, a Canadian financial news broadcasting icon, and myself, and through a sure. What's that?
Needs no introduction, that's for sure.
Yeah, he and I are going to be doing a lot more shows. We're working on those shows right now. Stay tuned. You'll see more about that. What else did I... I think I found some other... Sorry, George?
What did you pick up as a vibe there? It was successful for you because you've got some great projects, but is that across the board? Was there a good vibe there? What did you pick up overall?
Well, the big vibe that I found, George, is that there's less fear on the floor than I kind of expected there to be a little more fear, and there wasn't that much fear. When the fear is at its highest, George, I get executives of companies start coming up to me and asking me, Al, when's the market going to turn around? When's the market going to turn around? I didn't see that sweat on the brow of a lot of people at the show, and I think that that's a sign that, like you said earlier, George, that the worst is over, that those that were going to die have died, and now we're seeing a better allocation of capital where things are starting to be better for those that are serious.
Yeah, I mean, you're seeing amalgamations, you're seeing financings, you're seeing all sorts of Garibaldi Resources and Gainey Capital announced a deal a couple of weeks ago, and I know you're going to talk about them, so I like what I'm seeing. I'm calling it right now. There's going to be a melt-up. Find the companies that are real. Don't bet on your dogs because they're trading at a penny or two and you think, well, they're finally going to turn around. Find the quality companies. We're a starting point. Remember, you got to do your own due diligence because this is just opinions of lowly Al and I, but I think the worst is over. What you have here are the survivors that are in the boats, and they've reached land, and they still don't know where they're going to go exactly, but they're off the sinking ship, and they're on dry land now. And you might have a couple of casualties. People had a little pneumonia and couldn't quite make it, but for the most part, the surviving party is who we've got.
Now, George, I think I see something that is going to maybe be a light. Not the train at the end of the tunnel, but an actual light at the end of the tunnel.
Okay.
And what that is and it blends into the strategy that I want to talk about, George, is that the U.S. dollar has been on a roaring move from the summertime lows against practically every currency in the world. And now the company, I've been talking about this for a while, that I think it was quite overdone. And just in the last, I want to say 6 weeks.
We've both been wrong about the American dollar, which continued to steamroll us, actually. It steamrolled me, that's for sure.
Well, no.
And
actually, George, it's stopped going up now. It was on a...
Really? What are you talking about? The last couple of days, the thing has moved a couple hundred basis points in the last 4 or 5 days. So you...
No, George, but what I mean is that parabolic move has now hit a more of a sideways trend.
Okay, so we see what happens.
It's bouncing now at a sideways trend. It's at an inflection point, is what I'm getting at. And I think that the next move on that inflection point is to the downside significantly. And I think what the catalyst could be is now, you know, these companies that are doing a lot of business outside the U.S., it doesn't matter where they're doing business, when they have to report back in U.S. dollars, they're going to take a hit. And I think that they're going to start making noise about some weakness, you know, that this is too strong.
Yeah, it just doesn't make any sense to me at all right now, but it is what it is. In fact, one of my picks is an ETF that I'm going to add a second, because I'm averaging down on a U.S. dollar bearish ETF because I think we're overdone as well. But, you know, I was wrong. I was wrong 7% ago, but I'm going to do it again, because it can't sustain it without hurting the U.S. economy at the end of the day, without hurting people at the end of the day, because they rely so much on exports. And it's not as if consumers in the U.S. are tearing it up either. So let's go to some picks. What do you want me to go? How about if I go through some quick picks first, because mine are quicker, and then we'll move on from there. What do you think of that?
George, before you get onto your picks, I just wanted to say that what you just talked about there, that shorting the U.S. dollar index, I think that you want to continue to build up your short positions on the U.S. dollar in a vehicle like that. Now, you're the kind of trader that will, you know, if it goes against you, you're out of it really quickly. I think that you kind of want to be building up a position on that right now. Because
yeah, that's what I am. This one I am. I'm not going to be bolting in and out of it. This one, because I'm also thinking it may take me 4, 5, 6 months, because either the Fed's going to raise rates and it's already baked into the cake and people are going to sell off the dollar, or they're going to announce that they can't raise rates and then it's going to have an even bigger drop. So it's definitely going to require patience, that's for sure.
Sure. Well, and that's the way I think you want to be right now with the USD. But if you want some more movement, I got some ideas. So go ahead with your picks, George.
All right, so here's some quick picks here. You can see my screen now?
I can.
All right, so let me just do, I'm going to go through them quickly here.
Oh, and by the way, George, I have a new 27-inch HP Envy computer. It's a flat screen, and it's a touch screen. But man, your screen looks so much bigger on this one.
We're paying you too much money.
Yeah, you didn't buy it.
All right, so here's the first one, TVIX. All right, so I brought the chart up here. This is a 2 times. So this replicates. It's an ETF. It's a 2 times VIX long. I think volatility is. It's just too low. Let me take a look at this chart here. I can't go back over a year because that's not accurate. But look at this 3-month chart where the volatility basically got cut in half. Okay, you can see it right here. So I made a call on Twitter. For those of you who follow me on Twitter, you should just look for Agoracom on Twitter, and we'll have a trading board in Agoracom soon enough. But I picked up 2 positions. My first at 208. My second one at 196, I believe. So average cost was 204, and I called that. I actually said I'm going to buy the first one at 208, even though I think it's a little high, because I wanted to make sure I had a foot in the game before it got away from me. But I said in that post I was going to buy a second one lower, under 2. I got lucky. I got $1.96. Here we are, 220 today. It's now over the 100-day moving average, which I think is a pretty important point because it hasn't been over that in a while. And I think it's got room to move. So, but
George, this, I'm looking at that chart and I can see a very nice bottoming pattern. I'd point you back to look at the about the February, or just go back in your chart there, and you'll see another position where it comes down and it creates kind of a round bottom, and then look what happens on the other side of it.
You're talking about right here. It just has to be. The great thing about these ETFs are they're not like stocks that can continue to go down. You know, an individual stock, George's Gold Company, can go to zero. Volatility is always going to be there, and sometimes going to be high, sometimes going to be low. But when they get to extremes, guys, the great thing about these ETFs is if you're patient, you can play them. So this is one of my big positions here. I'll leave it at that. The second one is UDN. Okay, this is the next one here. This is the ETF that I picked up somewhere around here, and I thought it was a great buy, and I still think it's a great buy, but I just didn't foresee. Now, normally I'd be out of this after 5, 6, 7%, but I'm committed to this because I don't believe the U.S. dollar can sustain this. So I'm taking advantage of this drop-off, and I'm going to buy some more. I haven't done it yet, but I'm going to buy some more in and around here, and that's a bet against the U.S. dollar. Again, it's an ETF, so it can't go to zero or something. It can fall, but it's not a stock. But I like it here in the low 20s, anywhere below. I mean, it's pretty much. It's a 21.22 today. I'd be tempted to do a quarter position and then another quarter position around 20.50 because I don't want to miss this. Timmins Gold is the next one. I bought some at $1 because this has this big habit. Look over the last year. It has this great habit of dipping, moving, dipping, moving, dipping, moving. So I bought the last dip. And then they came out with their quarterly results, and they missed by a penny a share. There are some concerns about costs, some concerns about their latest acquisitions. So what I'm planning to do is, and I think those concerns aren't necessarily invalid. So what I'm planning to do is buy some more here in the low 80s to average down my dollar. I think it was $1.02 that I bought in, and I plan to be out. And I wouldn't be surprised to see this somewhere around. I think $1, $1.02 is going to be its new resistance. So if I can buy it at 80-ish, get about a 90-ish average cost, I'll be out of it somewhere between 95 and 98 with a profit, and I expect that because at the end of the day, they still got production, they still generating cash flow and all that. Seabridge Gold is one to watch. All right, this is a notorious dipper and runner. Take a look at the one-year chart right here, Alan. You can see that?
Yes, I can.
Dips and runs, dips and runs, dips and runs, dip and run. Another dip. You know these guys. They got the KSM project in British Columbia. Massive copper gold holdings. It's taken a hit with the price of gold and things going on. But take a look at where it's at right now. It's pretty much sitting at this, this 1 year. This is charts 101. Just got put the crosshairs over the latest price, and then compare it that straight line across the rest of the year. You can definitely buy into this, and I'm liking it at these levels.
Yeah, it's at a 52-week low, and and I think that as gold gets stronger, it's a real story with real discoveries and projects, and that's definitely one you can take a look at, I think.
NUGT Nugget. This is a 3 times a triple bull ETF on gold. It's gotten whacked. Forget about the last month. Let me show you the 3-month chart here. It was upwards of $21. And just look at this. Back January 16th, my man. You talk about $21, and yesterday closed at $8.72. So I went online yesterday. This morning before the open. I say Nugget is something that's got to be bought in the next 48 hours. It went down to a low of $8.17 today. I think that was short-term capitulation. Now trading $9.40. Okay, so it's an 8% increase in 1 day. That's my kind of stock. Unfortunately, I was in some pretty intense meetings and couldn't catch that. So I'm. But hopefully
on that, George, I'm a lot more of a stock picker. So I don't, if I don't really need an ETF to do my picking for me. But for some people that just want exposure for a very quick pick, that's something you want to look at for sure.
Well, let's talk about why I like ETFs for a second, especially these doubles and triples, because if you think that an asset class or a commodity is at a top, because you got these triple bear ETFs, so you can bet against it at the top, or you got these triple bull ETFs, where you can go bet with it at the bottom. you get significantly more lift than anything else you could possibly find on the market.
Oh, no.
Over a short period of time. Over a short period of time. No, Al, come on, absolutely. You can get 40, 50, 60% jump.
No, you give me. I'll give you one pick. The next time gold rallies, I'll give you one gold pick that will outperform that every time.
All right, next time I buy Nugget,
Yeah.
I'll post it, and you give me one. You give me a straight company, and we'll see who does what over the all three.
It'll be Rubicon. It'll be Rubicon.
All right.
And so every time you get ready to buy NUGT, just my pick is Rubicon RMX.
Well, right now, today, Nuggets up 8.37%, Nuggets up 5.3%. Just letting you know, in one day, it's outperforming. It has to, because it's a triple bull, right? It's impossible. It's not. You're not. That's almost unfair for Rubicon, actually, because this is so highly leveraged.
We'll see. That's one day, man. Watch do a 2 or 3 day rally. We'll see.
All right. A couple more here. Let's get into technology. Theralace Technologies. Been watching this for a while. They got some good stuff going on there. Stock took a hit when the company announced a 44-cent financing, so take a look at that. 55 all the way down to 34, 35, and today it's at 36.5. You can pick it up at.
Ooh, that one looks interesting. I like the looks of that one, Georgie.
And here's what I like. The company announced that the financing is now closed. Because typically what happens is you get a lot of selling from existing shareholders.
How much were they raising?
It was a significant amount, but I can't remember how much. It was significant. Significant enough that what most likely happened is you had a whole bunch of people sell in the open market. You know, large investors are going to take part in the private placement. What do? They sell in the open market, buy it back because they get the warrant with it, right? So I see this pattern, guys, happen all the time. Now the company's announced that the financing is closed. Announced it a couple of days ago. Financing is done. It's closed, which means you're not going to have anybody else selling major chunks in order to get in on the financing. So I'm pretty confident. I haven't done it. I got to buy it before the end of the day. I pick it up here at 36, 37, 38 cents, and I'm pretty confident sometime next 30 days it's somewhere around 48.50, 47 to 50, somewhere in there. I'm loving this pick.
Now you got to be careful, George, that when that stock comes free trading in 4 months, that if people are the kind that will trade out of a position to buy into a private placement, once their stock goes free trading, they're probably going to sell that and keep the warrant. So,
well, I'm not going to be around 4 months from now. I'm talking about 3 to 4 weeks.
Well,
yeah, I agree with you. Alan's 100% right, but I'll be out in 3 to 4 weeks.
But you got to remember, not all the audience is exactly thinking like you, right?
Right. Well, of course. So I got to make sure. Thanks for helping me point that out.
No problem, buddy.
Alan, I can't remember if I showed you this company in Vancouver. The name of the company is Sphere 3D. Trades on the stocks ANY.
I would remember that name.
Sphere 3D. And the thing is, the company's got nothing to do with 3D. Don't let me get started. I've been talking to the CEO. He's got to change the name so it doesn't get swept up in 3D. But guys, I'm telling you right now, go do your due diligence. This could be a monster, disruptive technology company of epic proportions.
What do you do?
Well, here's the thing. If I dive deep into the technicals, I'll lose everybody. So let me make it easy. Let me make it this easy, okay?
Just tell what industry or like what's the basic
software. So I'm about to explain it to you. I'll give you a real basic example. So here's what the company does. They can take any technology, whether it's current technology like an app or legacy technology that's 25 years old. They run it through their virtualization technology, okay? And that's so basic. I shouldn't even be saying that, but that's just help explain it. And what it does is it instantly makes that software available across all platforms, on any device. I watched it in action. I was absolutely blown away by this. Now, here's an example of how it happens in modern day. Right now, Alan, you know this. Guys who build apps typically build them for Android and Apple, right? Google and Apple systems, because that's where the majority of people are, and they don't bother going on to other systems at the end of the day, right? Too expensive. They don't want to upkeep it. It's not big enough of a market for them. Sphere 3D solves the problem. Here's the bigger issue. You got massive technology companies working off legacy systems that are 10, 15 years old, 5, 10, 15 years old, right? Well, look what's going on in the world. We've got tablets. There are different tablets from everybody, phones from everybody, desktop devices, laptops from everybody. They're all running different platforms. They all have different requirements because the hardware. It's a nightmare for most companies. These legacy companies with the legacy systems, are having problems because they don't want to trash their legacy systems. They're not ready for that major expenditure. But how do they make sure that their employees or vendors or customers can still continue to have full access to this? Maybe it's e-commerce technology or something like that. Sphere 3D is the answer. The company literally sends the code over to Sphere 3D. They do their magic. Bam, it's available on any platform, on any device.
Yeah, it's interesting. I'll take a look at it. You know, George, I'm involved with the operating system company that is involved with this kind of stuff. So this is a conversation we can have offline, but I'll do some homework on it for sure.
Go read the latest Seeking Alpha article. This could be a monster. So it's not a quick trader. Look at the stock, has some really fast moves, made some great acquisitions, got some great revenue already coming in.
Oh, wow. Oh, so they're a real company.
Absolutely 100% real, 100%. And the director and the CEO is Greek, Peter Tasiopoulos, but that has nothing to do with it, okay? But it is a big advantage that he's Greek, that's for sure. And those are the companies. Those are the companies that I've got out there for everyone to watch. And I hope I gave you a really, really good rundown. The list below here is Alan's. So, Alan, why don't you start with Torque Oil and Gas?
Well, first of all, George, there's some strategy I wanted to talk about that, just like I think you should be building up shorts in the U.S. dollar. The key strategy that I want to talk about is I think that for the foreseeable future, with the price of gold and the price of oil being down where they are, that they've beaten down the stock so badly that I think you can see a trend as things get better for the price of gold and oil that will pay off very handsomely. And it's a very basic trend, George. I think.
Will it get better? I got to play devil's advocate, right? I'm not saying it's not, but gold 1151, crude back under 50. Does the world have enough demand?
Well, there's either one of two things are going to happen here, George. Either the price of the commodities is going to drop very rapidly. If it does drop very rapidly, then what will happen is it'll be too expensive to produce any, so the supply chain will shrink. We're already seeing it in the price of gold. We've seen one company down in Nevada just file for bankruptcy. Stands Gold can't make it because of the low cost of gold. This is the reality of what's going to happen when you have gold under $1,200 for a long period. It's at the cost of producing it or below for the average gold producing mine out there. The same thing's happening with the price of oil. Now, if people are always most fearful when they should be most greedy, and that's where I think we are right now. You're not alone in your skepticism about buying the dips. Here's my strategy. I think you can buy.
I'm not a skeptic. I just wanted to challenge it a little bit, so that's not just a given. That at the end of the day,
I think there's two catalysts to see the price of those commodities. The fundamental basis, the backstop, if you will, is that we're at or below the cost of producing it on average throughout the world. The one that will be a more aggressive catalyst is the U.S. dollar coming under some pressure. If the U.S. dollar comes under pressure, gold and oil will take off. So that's that's what my strategy is all about. And so I think that right now what you want to be looking at, and it doesn't matter if this market goes sideways for a while, I still think this strategy is going to pay dividends for you. It's because these gold and oil stocks are so beaten down that when gold and oil sell off, you can buy these and then see them pop 25% in a matter of a couple of days. So I think what you want to be doing is buying on the dips, selling on the ups, on the rallies, to try to build up your cash position. And if the market goes like this, which I think it's going to, or possibly even more like that, but if it goes like that, even if it goes like sideways, I think this strategy will pay off if you are a good stock picker. And I've got 7 picks here, George, that I'm now calling my sort of model picks. And what I'm going to do from now on is these are picks that I think you can buy on the dips, and I'll either be removing or adding more as we go on in future shows. So I don't know, we're going to have to maybe not call this best of the best, and we'll have to figure out some other name. But that's where my strategy and thinking is right now, George. And so I want to be I want to be focused on that.
All right, so Torque Oil and Gas trading at 978. There's the chart you can see in the right-hand corner there. It's definitely made a big rebound from the low 7s. In fact, it got as low as 664 back in January 13th. So,
and I picked it on the show right around then too. I think around very close to that price, George. And why I like this one so much, George, is because I looked at the bottom lines of a lot of companies when the price of oil got hammered down, and my 2 oil picks are well positioned financially to withstand this current price, and will only do better as they go forward. So Torque was one of them, and the other one is Chinook Energy, which is CKE.
Hold on, before we get off Torque. So for someone like me, stock is up 50% in 2 months. Do you feel comfortable with someone like me entering at this position here? And if so, is that because it's a long-term hold, and so I shouldn't worry too much? Or
right now we're on an oil dip, and Torque is a buy as far as I can see in dips, and you want to sell it in the next rally.
Okay, so you saying I should wait then? I should wait for...
No. Oil's below $50 right now, right?
Yep, we're talking about $48. Yeah.
Okay, so that's green light territory in my bang on the desk strategy.
All right, that's a gutsy call. Next up is, like you said, Chinook Energy, CKE. Here it is right here. July is $2.60. Today Chinook is at $1.25. So you talk about literally a 50% haircut. Low was $1 a couple of months ago, so it's up a little bit. It's got about 25% gain. So for someone like me, it's a little more palatable, but it's running up against that 200-day moving average. Tell us a little bit about Chinook.
Well, Chinook is much like Torque. When I looked at the financials when the price got beaten down below $50 the first time, George, Torque didn't have to lower their dividends. That tells me that that's a well-run company. CKE, which is a smaller company, they did all the right moves, and they're able to keep doing their exploration and everything at a more moderate pace. So I find that both these companies are very well run. Chinook Energy is as I said, a smaller company with more growth potential, but I think it's a well-run company that can handle where we are right now in the price of oil. So again, this is another one with oil under $50. I think this is when you want to be buying, and when it gets over $50, you want to be looking at trimming your position and building up cash.
Dow Radium, DNA. I'm going to give you 100% credit on this one. You first found it in the 50-cent range or so a long time ago. I got the 1-year chart up here. So it had already been 50 somewhere way out here. Yeah. Made its run, got back down to 50 there in early November. Made another double run. And I remember I berated you about this call back then because its volume was non-existent, and I said, how can you buy stocks that just don't have that much liquidity? I can't do it. And lo and behold, the company's now doing an average of 550,000 shares a day. So, there's an example of the great Alan Berry patience. Where's Dow Radium going from here?
Yeah, well, Dow Radium, why I picked it, and actually that was very early in their drill holes, George. I really liked what I saw. It had very good grades of gold in their drilling, and I like it when they've got high grades. It gives you higher margins, and higher margins are sort of the the mother's milk of being able to withstand some difficult times in the market. And something that's happened recently with Dalradian is Ross Beatty took a 10% interest in the company. I think a lot of the bigger players in the gold business are starting to realize that Dalradian's got a great chance at having an exceptional gold mine there. And yeah, I think they've got a lot.
Where's there?
There is Ireland, Northern Ireland of all places, George.
All right.
So they got a great symbol, and they're in an interesting place, but they got some big money guys putting cash in now, and I think that you know, anytime gold's under 1,200, I'm gonna keep singing this song for a long time. Here's one you want to take a look at, and I've got some more too.
Garibaldi Resources. Now, full disclosure, Garibaldi is an advertiser-sponsored client of Agoracom. Are they your client, Alan?
Actually, they are they have a banner on my website. I'm not a shareholder of the company, but they do have a banner on my website. But you know, this is a situation, George, where I'm in a bit of a difficult, well, not a challenging situation on the disclosure. I don't offer much advice to the company. We do have regular chats, and I give them my opinion of what I'm seeing happen, George, but they're not really that kind of a client with me. They have a banner on my website.
But still, there's just as full disclosure, there is some vested interest in the stock going up, so everyone should take your comments with knowing that in mind. Nothing wrong with having. Listen, guys are on CNBC all the time, right? And when they're on CNBC, it says.
But I'm going to tell you now why, and it has.
So tell me about Garibaldi. I mean, I love the company. I can only talk about what's on the website because I can't. You can talk about more, but I can tell you, great management, great capitalization, great projects in BC and Mexico. The company has not stopped during this entire last 2-3 years. Hasn't stopped moving ahead. And they hadn't had to raise any significant money for years because they were able to. They had disposed of a property with Premier Gold. Paramount. I keep using Premier Paramount, and they had shares in Paramount, so they would just sell those in the market little bit by little bit when they needed cash. So these guys are textbook how to survive and thrive in this kind of environment, and I love them. So tell me now about what you're liking about Garibaldi, and even talk about that deal they saw with Gainey Capital a couple of weeks ago.
Well, I mean, the Gainey Capital one isn't what's got me so excited, George, and why, it all comes down to me. Doesn't matter whether I own shares in a company or they have a banner on my website or they're just a pick. It all comes down to the drill hole for me. And what I see there is it's hard for me to find good small silver companies before the market as a whole has really found them. And I think in Garibaldi you have a situation where they have an emerging, extremely high-grade discovery in Mexico of silver, and they're not recognized as a serious silver play by the silver community of investors. Some call them the silver bugs. I think that they haven't been discovered by that community yet, but go look at their drill hole results, and that's what I'm making my argument of why I like these guys. I'm looking for silver stories. Anybody out there thinks there's one that I should be looking at, let me know. They're hard to find, but I think Garibaldi has a very exciting results on a couple of their properties down in Mexico for silver.
What do you think of silver being at $15.40 though?
It's just, again, it's another commodity, George, that's being punished because of the unrelenting move in the American dollar, and it's now trading below the average cost of producing it.
Which is what?
If you're a sort of an economics 101 kind of person, you got to look at that and say, well, supply and demand here means something.
Okay. And great to hear that about Garibaldi because we own all of our shares in them. They're a client, and then we're shares for service as a client, and we've been confident enough that we pretty much have all of them. So not worried about in the least. I want to give those guys a chance to really stretch their wings over the next couple of years. Next up is Lucara Diamond. Trades at $1.83 on the big board TSX. Here's the 1-year chart here. So, if you talk about diamonds have been performing well, but over the last year, Lucara hasn't. What's going on there, and why is the opportunity here?
Lucara is kind of a company in transition. They've started to be. They're a producer of diamonds now. And, the price of diamonds have softened a little bit recently, but they've been on a great run since the 2008 bottom, and I think they'll continue to do very well. The supply and demand is very much favoring higher prices in diamonds, and so that's why I wanted to pick a company like a Lucara. I'm very bullish on the price of diamonds. I think my own actions are pretty indicative of that, George. I'm helping to build a Canadian diamond company in Dunedin Ventures, and I'm putting my money behind where my mouth is because I'm so bullish on the price of diamonds. And Lucara is a great company to take a look at for that purpose. They're a new producer. They're producing in Botswana, and they're going to have they're coming up with big stones on a regular basis. These kind of stones where, they're multi-million-dollar stones, and it catches the attention of the investor community out there. So that's why I like Lucara a lot right now.
What do you say to a skeptic who says, Alan, China's slowing down, it's pretty clear. They put some real estate numbers today, worse real estate numbers in a couple of years. Europe is obviously going through a lot of pain. Otherwise, they wouldn't be doing the QE that they're doing. You've got negative interest rates in Switzerland, a couple of other countries. The German 10-year, I think, is 0.2. Is that, am I right? Was it the German?
Yeah, it's pretty low. Yep.
So, what do you say to people who say, Alan, how are the price of diamonds going to go up when China and Europe are suffering so much?
Well, let's roll back the clock to 2008, and the same things was being said about the American economy, which is the largest consumer of diamonds. And while all that has been unfolding over the last 4 or 5 years, the price of diamonds went up.
Okay.
It's pretty simple.
Hey, I got to ask these questions.
Yeah, sure.
Premier Gold Mines, PG, no stranger. People who are watching the show, you've been banging the table on Premier Gold Mines. I remember from $1.25, the $1.25 third range, all the way up, and here it is at $2.50, despite the fact that gold's sitting at $11.50. So again, another fantastic long-term pick. I regret I've had a couple opportunities to buy this thing on dips, and I haven't done it.
Well, I think you got another good shot here. While going it again, George, and they just did a great deal on a project that they have up in northern Ontario with Centerra. They've now created a joint venture. Centerra is going to be funding the building of a mine there for their near Geraldton project. Plus, they've got 2 other projects. One in Red Lake, Ontario, where they're partnered up with Goldcorp. They got another project down in Nevada. This is an excellent company. As tough as things have been, they've had a pretty good looking chart, and I think that they fundamentally they've got a great story. If you get gold going back up to $1,400, $1,500 this year, I think you'll see a Premier Gold perform exceptionally well.
Hold on. How do you just say if gold runs up to 1,400 or 1,500 this year? I mean, that would be a pretty major move. You talk about 25 to 35% move. How can you say that? Now, I don't see that. I don't see that at all. This year,
I can easily make that story. I think that the U.S. dollar is 20 to 25% overvalued right now. If it comes under pressure, things always go too far. They run too much and they go too far in either direction, right? So if the U.S. dollar comes under pressure, even if it went down 10%, I think you'd see gold be a melt up kind of a situation. Like you're making this, we're actually making the same argument. Now you're you're kind of going contrary to it, George.
No, because mine is based on the underlying valuation of small cap companies that have been absolutely beaten to hell with, like I said, sub $5 million market caps. You can't say gold has been beaten to hell. So I'm not basing it on the underlying commodities making a run. I'm just saying that the venture is very unique. It's suffered because, and actually, let me take off. Oh, we do have Rubicon. So.
Well, no, I'm giving you the catalyst. Is I think we're in for. Hey, George, a couple $100 on the price of gold isn't that big of a move when look at it. Well, I remember when it was trading at 260. Okay, so a couple $100 on the price of gold after a few years of it being under pressure, it's just a relief rally more than anything.
I'm just saying that my call on the venture is based on the fact that the venture was saturated, and I should say CSC also from here on in, but the CSC is almost not as resource heavy, so I don't include them in the same, and that's good because they didn't allow that to happen. But the venture allowed way too many companies. In fact, we got to talk about this next time. Tony Simon put out an article proving empirically that 600 or 700 companies should be delisted because they don't have their they don't meet the minimum requirements for working capital. But we'll talk about that later. So my point is, my call is not based on the underlying price of the commodities, based on the fact that we had this oversaturation of really crappy companies that had no business being public, and they all imploded.
Yeah, I get where you're coming from. I mean,
those guys that are left have just been beaten up too much, and they're going to make a run. And now, the degree of that run is going to rely on the underlying, price of the commodities at the end of the day. That's for sure. But I think they're bound to make a rebound regardless, just because you're going to have investors around the world saying, company X with a $8 million market cap is just too cheap. We got to put some money in there and start moving that project forward. And I want to buy into that at $8 million or 10 or 5 or 12, and that's what's going to happen.
George, there's a reason why I'm so bullish on this buy the dips, sell the rallies, and banging the table on it is because I agree with your theory, and I also think that we're in for we've had a few years now of pressure on the price of commodities, and it's time for them to get a bit of the wind start blowing the other direction. And there's still people buying gold every year. If China and India took away all of their restrictions to importing gold, the price of gold would be $5,000 in a very quick period of time, George. No matter what's happening in the economies of China and India, they continuously consume more gold, and it costs you $1,200 to pull it out of the ground. How can the price of gold not rally here sometime soon quite significantly? I can make a case that I think it's at least 20 to 25% undervalued right now.
And I'm looking over my shoulder as you're talking because something interesting that the Dow seems to be down on the day. And usually when you have big drops on the Dow, like we had yesterday, you usually see a pretty decent rebound. And you're not seeing it today. And I'm looking at a chart, and interesting that it's given back. It's actually given back any gains it kind of made earlier.
And I think the catalyst for that, George, is because of the U.S. dollar being too strong.
Yep, I agree with you there.
That's why you notice that when they've done that, George, it's on the days when the U.S. dollar is gaining strength.
I can't say I've made the correlation, but I wouldn't be surprised. That's for sure.
Just watch. I haven't looked at the market much today, but I'll bet you if the Dow is down significantly today, that the U.S. dollar has rallied today. It's only 11.79 points. It's nothing.
No, but it's not that. I'm not worried about that that's red on 12 points. What I'm talking about is we had this massive drop-off yesterday, okay? Tuesday, the Dow took a monster hit. We're talking about a high of 17.9 or so, and it closed at 17.6, right? So it took a massive hit. Whenever you see those massive hits, you always see a rebound in the U.S. In these U.S. large cap, S&P, Dow, all of that, right?
And I think the reason they're not rallying in George is because they're going to be under pressure on the earnings side. And right now with earnings, The multiple right now is about, I think, 18 on the S&P 500. If you put the earnings under pressure, it's going to have to expand to stay where it is. So now you're starting to talk about 19, 20 times earnings. That is way too overvalued right now when you're in an environment where they're growing their earnings. This will make it so they're growing their earnings probably in single digits.
So where do you think what do you think the Dow and the S&P and the major indexes do in the next 12 months? Will it be up for the year, or do you expect it to have its first negative? It just can't. Those companies can't sustain both weak consumer spending and the inability to take a hit on their export.
I think what prevents it, George, from a big dip down is that it still seems to be an island of tranquility, if you want. But I think what we will see is a sideways market with some pretty good volatility on the either side of that sideways action.
All right.
I wouldn't touch. You know what? And George, I've seen these markets where that could go sideways for 2 or 3 years either you're going to see the prices come down dramatically, which then I would be very bullish, or it's going to trend sideways for 2 or 3 years while the earnings catch up to the prices.
All right, fair enough. And your last pick is Rubicon, RMX, and you actually said that RMX is your generational pick, your number one, and you've never had a number one pick. You've always had a bunch of companies that you love and you bang the table on, but you unequivocally have thrown down the gauntlet on Rubicon, and it did go from the low dollar to $1.50 on this first run. Can't believe I missed it yesterday, but it was under $1.05, $1.08, and now it's back at $1.20. So you're obviously not trading it. Where's Rubicon going? What's the catalyst? And you're talking about they're going to start producing in the summer?
I would say one of the reasons you want to be building up positions right now is so that you have the cash. I think that as you go forward and you make some profits in this strategy, I think you want to overweight onto Rubicon with your profits. And why I say that is that what created Goldcorp to be the largest gold producer in the world was the start that they got in Red Lake, Ontario. That was about 12 to 14 years ago. So in 14 years, because of the quality of what they had in Red Lake, Ontario, they have now grown to be the largest gold producer in the world, largest gold company in the world that's primarily focused on gold. Rubicon is the next company to bring a gold mine into production in Red Lake, Ontario. I'm very hopeful that they don't get taken over. I think there's a very serious risk to my performance that they do get taken over. But it will be a short-term winner.
Now you're talking my language. What do they get taken over at if they get taken out?
George, if I was running a gold company right now, I'd be taking them over today. I'd offer $2 for them. What's that?
What price would you pay? $2?
I'd pay. Let's just say my first bid would be $2. If anyone wanted to participate in a hostile takeover, I'd expect to have to pay a lot more than $2.
Interesting. Okay, then we'll leave it at that, buddy. You've been banging the table on Rubicon, that's for sure. So,
never had a number one pick in my career.
And you've had a lot of great picks. Oh, by the way, really quick question, because we haven't talked about it a long time. Fission Uranium. Give me 45 seconds. That's all. But they've made a great comeback. They're back over $1.30 last time I saw. Where are they going?
Yeah, Fission was. I didn't want to make the list too big today, George, but Fission was actually on the list, and I tried to tighten it up a little bit. But they will be on this list sometime in the future, and I think that they're a play on two things. The price of uranium gaining some strength. We're starting to see some of the reactors in Japan going back online, I think that we're going to start seeing the demand pick up again, see the price move up. So I think if the price of uranium moves up, it's going to help a fission. But I also think that they're a takeover target. They have the best. It's better. What they have is better than what Hathor had and was taken over for 475 million. It's high grade.
We have a 300 million. What's the market cap right now? I got to check this out.
It's about probably 300 million, something like that.
I'll tell you 1 second.
And
market cap's 475 million right now.
Well, when they get taken over, I think it's better than what got taken over for 475, and I think it could be significantly better.
All right, so you're saying Hathor got taken up for 475, so you would be surprised if Fission went for 600, 700? Stop me if I'm wrong. Where do you think Fission could get taken out at? Market cap wise.
You know, they could sneak up on a 1 billion kind of valuation, I think.
All right.
Now, George, let me qualify that. I don't want to be quoted on this. There is a lot of things that have to go right in order for them to get that kind of evaluation, but I don't think it's unrealistic. They're starting to put two zones together. They're finding the mineralization is continuous. It's not separated. If that's the case, this thing could be a monster, discovery, and it's already world class because it's right at surface and it's super high grade. But it could be a monster in size as well.
All right. We'll leave it at that. There's so many more things I want to talk to you about, but we'll leave it at that. I want to talk about whether Greece can get kicked out of the EU, what effect that'll have, but we'll talk about that next week.
Next time.
Great show, and looking forward to everyone's feedback on Twitter, online, at Alan's site, on Agoracom, everywhere. So hope you all enjoyed it, and as always, do not take what Alan and I say as financial gospel. Do your due diligence. Speak to your own financial advisors. Your risk tolerances are way different than our risk tolerances over here. So don't make any moves because we're making them. We're just telling you what moves we're making, why we're making them, to help you kind of go do your own research, and hopefully that's educational and entertaining at the same time.
It's been a great show. Thanks a lot, George. We'll talk to you all soon. Have a great day.